I want to share 7 reasons why the NASDAQ 100 could go to 25,000 and how to trade that. This might sound crazy, but I'm going to show you how it could easily happen, how to potentially capitalize on it. We live in a world right now of extremes, and I believe this is more probable than the market currently believes, which gives us the opportunity and the potential advantage. Here are some of the top fundamental and technical reasons. Number 1, contrarian market sentiment. It is hard to measure market sentiment. Everyone is starting to cry asset bubble, but I don't believe we've seen real euphoria yet in the market. Legendary investor Sir John Templeton has a contrarian map of market cycles. First is bull markets are born in pessimism, and I believe we saw that in the pandemic lows when the Federal Reserve stimulated the economy. It's kind of the beginning of the current bull market off the pandemic lows. The market continued to rally during skepticism of coronavirus. The market has been maturing in optimism as of late, and I believe we are entering the stages of euphoria. Once again, this is hard to measure, but I believe that we are just now entering euphoria, and the market must go through a euphoric stage before it dies, according to this map and according to the market cycles we have seen. The second reason why is the seasonality. November through May is the strongest time of the year. Most long-term investment gains in the stock market have been made during this time of year. The third reason is historical price action in the stock market. If you take a look at the contrarian market sentiment as well as the seasonality, you see that in the dot-com bubble, October 1999, the market closed at 2637.44. By mid-March of the next year, March 2000, the market had rallied 82.6%. That's in light of a January that was down and retraced over 50% of December. So you have this path in the market where the market is high, it looks overbought, and you enter a seasonal period, and the market surges 82.6%. And you get this euphoric cycle. That has happened in the past. I don't anticipate that the market will rally 82.6%, but if it does, it would go to 28,000. Just a 25 to 30% move would put us near the 20,000 mark in the NASDAQ 100, which is very reasonable considering the price action in the current market. Recent price action in the stock market is number 4. And we take a look at meme stocks such as GameStop, AMC. We look at Avis Car Rental, which recently went from 100 to a high of 500. You see Tesla has gone 10x since the pandemic low. So we don't expect the market to 10x or 5x. We do anticipate a 25 to 30% or higher move over the next 6 to 9 months. Simply the liquidity is in the markets, and you can see it in the individual stocks. And in the short term, you see the tape. The price is the biggest indicator of price. You see the vicious nature of buying every dip. I think that will rotate into more breakout and is difficult to short this market. And I anticipate that the euphoric nature of the market will cause market participants to start chasing performance at the end of this year and at the beginning of 2022. Number 6, tech is deflationary. This means that during times of inflation, technology can improve processes and lower costs associated with bringing goods and services to the consumer. So while we are facing inflation, this tech as deflationary concept can favor investment into tech stocks and the NASDAQ 100. And the biggest fundamental factor, one we've all talked about for a long time, is the Federal Reserve's monetary policy. It remains easy for the next 6 months. They've reduced some of their stimulus, but the stimulus is still at a pace of over $1 trillion per year in their bond buying program. Interest rates continue to remain very low at emergency rates, 0 to 0.25%. This provides massive liquidity to the market, and whether you agree with it or not, it is there. And as long as that fundamental factor is there, the opportunity to continue to ride that wave is there. You see the Fed stimulus since 2009. We are familiar with 3 major events. Housing market crash, 2009. The Federal Reserve came in, QE1, QE2, QE3, low interest rates under Ben Bernanke, Janet Yellen, and then During Jay Powell's time, we've had the taper tantrum. The Federal Reserve wanted to normalize interest rates. The market sold off hard. The Federal Reserve reversed its policy. The market rallied. We had the pandemic also under Jay Powell. The market sold off hard. And then $3 to $4 trillion has been part of the bond buying program and introduced into the economy. And we see the S&P doubling off the lows. And so this stimulus is still there. And so it's the biggest fundamental factor. We are short-term traders in futures and options, and we want to invite you to subscribe to our channel, continue to learn more how to trade the NASDAQ to 25,000.